I'll give it 2 minutes. If you have any doubt of previous 2 sessions, just let me know. Anyone have any doubt, please let me know. Okay, so let us discuss the next section. Then is tax account number. जैसे PAN होता है, with PAN you are able to file your income tax return. Same way with the TAN you are able to file TDS return. चलो, next section is section 194R. Deduction of tax at source on benefit or perquisite in respect of business or profession. See, my dear friend, if you are providing as an employer, if you are providing any perquisite to your employees, then it is chargeable to tax under 192, right? Then you are liable to deduct TDS under section 192. But if you are providing any benefit or any perquisite to your, say for example, to your customer, in medical, the pharma company provided the freebies to the doctors. Okay, so that is the benefit provided by pharma company to doctors. So now if you are providing any such kind of benefit or perquisite for your business or profession, then the provider of benefit is required to deduct TDS at the rate of 10% on value or the aggregate of such benefit. If the benefit is in kind or partly in kind and partly in cash, then it is the responsibility of provider of benefit to ensure that before providing the benefit, the tax has already been deducted and paid. Okay. Now this section is not applicable when the benefit provided during the financial year is less than 20,000. So say for example, if you are giving any gift to your customer less than 20,000, then this section is not applicable. But say for example, pharma company provided the freebies to the doctor amounting to rupees 2 lakh, then the pharma company is required to deduct TDS at the rate of 20%. Again, this section is not applicable to those individual NHUF whose turnover in last financial year is less than 1 crore, and if they are in the profession, then the gross receipt is less than 50 lakh. Obviously, the CBDT has power to provide in guidelines, and if they want to change anything, then they can. CBDT means Central Board of Direct Tax. Meaning of person responsible for providing. So person responsible for providing means the person providing such benefit or perquisite. In case of company, the company itself including the principal officer thereof. So they are required to deduct TDS on freebies. Clear everyone? Yes or no? So 194R is newly inserted section. It is effective with effect from 1/7/22. So it is newly inserted section. Next is income payable net of tax. Income payable net of tax. Say for example, mainly this case arises when the international transaction took place. Say for example, if you are taking any service from Google. Google is service provider. And say for example, XYZ Limited is recipient of service. In this case, XYZ Limited need to pay the amount of service received to Google, right? Now they both are entered into an agreement, and Google will say to XYZ Limited that whatever tax liability on this kind of payment arise, you have to bear that tax liability. I just want net amount of 1 lakh rupees. Okay, so Google will raise an issue, generate an invoice of rupees 1 lakh to XYZ Limited. Now XYZ Limited, as per the agreement, the XYZ Limited is required to pay 1 lakh to Google. Now this is the case of service, right? So in case of service, 194J is applicable. So, and the amount of service is more than 1 lakh rupees. So XYZ need to deduct TDS at the rate more than 30,000. So XYZ Limited need to deduct TDS at the rate of 10%. But as per the agreement, what Google says whatever tax liability in your country is generated, whatever the amount of TDS, I don't know about that. I want net 1 lakh rupees. So 1 lakh is after deduction of tax. So whenever in any example, if the question provides that the amount is net of tax, even in case of dividend, if you are doing an PGBP example, and in an example provided that Mr. X has received dividend worth rupees 8,000 net of TDS. So it is the 95 rupees. Why? Because 95%. Because the rate of TDS. So you have to apply the rate of TDS and you have to gross up that amount. So in this case, Google will say, I want net of tax 1 lakh rupees. Okay. So in that case, what you have to do, whatever. See here, the tax rate is, suppose gross amount is 100, then tax rate is 10, then net amount is 90. Okay. So you have to gross up that. So if at 90 rupees, the amount is 1 lakh, then at 100, the amount is 1. Then the result comes to 1,11,111. Now the 10% of 1,11,111 comes to 11,111, and net of TDS comes to 1 lakh rupees. Okay, my dear friend. So whenever in question it is provided that the TDS is the amount is given net of tax, then you have to gross up that amount. Clear, everyone? Yes or no? Say, for example, in an it is provided that Mr. X has received 7,000 as dividend. Now, and the dividend is net of tax. So now the 7,000 is 90. Why? Because the rate of TDS in case of dividend under 194 is 10%. So what you have to do at 90, it is 7,000. So at 100, what is the answer? What is the answer, everyone? It comes to 7,777. Chalo. Next is interest, dividend, or other sum payable to Government, Reserve Bank of India, or certain corporation. The corporation means municipal corporation or anything that is the notified by the CBDT. So if you are paying any interest to government, any government, right? Reserve Bank of India, or dividend, or a corporation established under Central Act, which is under any law for the time being in force, exempt from income tax, or a mutual fund. Then the provision of deduction of TDS is not applicable. So if you are paying dividend to government, then you are not required to deduct TDS under section 194. Same, if you are paying dividend to Reserve Bank of India, then also you are not required to deduct TDS. Next is certificate for deduction of tax at lower rate. Tax at lower rate. Now, say for example, Mr. X is having income of rupees 5 lakh. And in second case, he is having income of rupees 6 lakh. And both are professional services. So the recipient of service is required to deduct TDS. Here say for example, he's provided service to ABC Limited. So here ABC Limited will deduct TDS of 50,000. Here ABC Limited will deduct TDS 60,000. 10% under section 194G. Now Mr. X does not have any other income. So the Mr. X total net taxable income is 5 lakh rupees. Okay. So in this case, in first case, what is the tax liability of Mr. X? In this case, it is nil. Because if your net income is less than or equal to 5 lakh, then you are eligible for rebate under section 87A. So here the tax liability is 12,500, rebate 12,500. So tax liability is nil. But ABC Limited has already deducted TDS of rupees 50,000 and deposited the same amount to the government on account of Mr. X. Okay, so government will have 50,000 rupees on account of Mr. X, but Mr. X tax liability is nil. So in this case, government will refund 50,000 to Mr. X. Why, my dear friends, what happened here? Here the income is 5 lakh, but actually in Mr. X account, the amount received is 4 lakh, right? After TDS. The TDS is deposited to government. So what happened here? The government have to refund 50,000 to Mr. X. Yes. So in this case, if the Mr. X tax liability is 0, then Mr. X can file a zero rate deduction certificate. So in this case, Mr. X have to file an application under Form 13 to the assessing officer that my tax liability is 0. So kindly issue a certificate that my TDS is required to be deducted at 0 rate, at nil rate. Okay, and if the assessing officer agree with that, then they will issue a certificate to Mr. X, and Mr. X have to give that certificate to ABC Limited, and according to that certificate, ABC Limited will not deduct TDS on Mr. X. Okay. So what happened here? There is no need to take a refund and wait for whole year to receive your block money with the government. So you can do that. You can apply for lower rate of TDS or for nil rate of TDS to the government. If they agree, if the assessing officer is agree with that, they will issue a certificate. Now in second case, the tax liability comes to I am taking without cess for your better understanding. Now here the tax liability comes to 32,500 and the TDS is deducted is 60,000 rupees. So in this case also, So in this case also the refund is 27,500. So here there is a TDS liability, right? So in this case, Mr. X can apply for lower deduction, lower rate of TDS. Say for example, here he can apply for 7% of TDS instead of 27,000, instead of 10%. In both the case, if your tax liability is zero, then also you can apply for the nil rated. And if your tax liability is less than the amount deducted, then here you can apply for lower rate. Clear, Mr. Anand? When your tax liability as compared to TDS deducted is low, then you can apply for lower rate of deduction. Clear? So we have covered the non-deduction of TDS as well. Everyone clear with this? Everyone, Mohammed, Itlanwala, Manoj, Anand, Yanesh, Lakshmi, clear? Mr. Kumawat, yes or no? Everyone, please reply yes or no. Sure. TDS deducted is income received. All sum deducted in accordance with the foregoing provision shall, for the purpose of computing the income of an assessee, be deemed to be income received. That means, say for example, your professional receipt is 1 lakh and TDS deducted. For 5 lakh, for rebate, you have to calculate the income before cess. Yes, Uday. You have to learn everything. Yes, Vedant, he can file a declaration for lower deduction of TDS, or if the liability is less, then he can also file a declaration for nil rated TDS. If you are an assessee, you can know that your income is what will be your income. Right? In last year, suppose your income is 4 lakh rupees, then you are able to understand, you are able to estimate that in current year, what will be your income. And they will check your previous year's return as well. Say, for example, I am providing a professional service, so I know what what amount I will charge. Say, for example, I have a fixed deposit. So, say, for example, if 1 lakh rupees is your professional receipt and 10,000 TDS is deducted, then in your bank account, the amount credited is 90,000, right? So, the TDS deducted is also your receipt. Okay, we have already discussed this. The amount, the gross amount is your income, not the net amount. That is not after the TDS. The gross amount is your income. So what will be your income? It is 1 lakh rupees. That is 90,000 received in your bank account and 10,000 deposit to the government, right? So for calculation of taxable income, you have to take a gross income, that is TDS deducted is also your income. I have already told in first lecture that you have to prepare a summary and you have to read that summary every day. However, the following tax paid or deducted would not be deemed to be income received by the assessee for the purpose of computing total income. Now, the tax paid by employer under 192(1)(a), that is, if the employer paid tax on non-monetary purposes, then that is not your income. And the tax deducted under 194(n). Now, what is 194(n)? It is the TDS on cash withdrawal. So if you withdraw any amount from bank, then that is not your income. You withdraw the amount that you have already earned. So the TDS deducted under section 194(n) is not treated as your income. But other than that, in any section, any TDS is deducted, that is your income. Everyone clear with this? Say, for example, I am earning an interest on fixed deposit 1 lakh rupees. The bank will deduct TDS at the rate of 10%, that is 10,000. Okay, and in my bank account, they will credit interest 90,000 rupees. So what is my income? My income is 90,000 credited in my bank account plus TDS. So my income is 1 lakh rupees. Clear, everyone? Yes or no? Now the person who deducted your TDS and deposited the same to the government has to provide you a certificate that that amount of TDS is deducted from your account from under whatever is the section and deposited to the government. So what happened here, my dear friends? Say, for example, bank will deduct TDS on interest on fixed deposit, right? So bank will provide a certificate to me that your TDS, that amount, X amount of TDS is deducted and deposited to the government to ensure that the TDS is actually deposited to the government. Tax deducted at source in accordance with the provision and paid to the credit of central government shall be treated as payment of tax on behalf of person from whose income the deduction was made. That is, in case of fixed deposit, the holder of fixed deposit. That is, the TDS is deducted on the name of holder of fixed deposit. Owner of security, depositor, owner of property, unit holder or shareholder. In case of dividend, the TDS is deducted on account of shareholder. Now the TDS is deducted. Okay. So my TDS is deducted. Whenever I am filing my return of income, I will get whatever the amount of TDS deducted by the payer. But the payer has to file a return of TDS, and on the basis of return, I will get the credit of TDS. Okay, so if my TDS is deducted by someone else, then I'll get the credit of that TDS. So Rule 37BA Subrule 1 provides that credit for tax deducted at source and paid to the central government would be given to the person to whom the payment has been made or credit has been given, that is the deductee, that is the payee, that is the. Say, for example, if I am providing a professional service to anyone, then whatever amount of TDS deducted, I will get the credit of TDS because I am the deductee. My TDS is deducted. On the basis of information relating to deduction of tax furnished by deductor to income tax authority or the person authorized by such authority. Now, say, for example, you have learned the provision of clubbing, right? So in case of clubbing, if my if my income is clubbed in the hand of my husband, then on that income, he will eligible to claim TDS rate. Why? Because the income is offered in his hand, right? So in that case, you have to provide I have to provide a PAN of my husband to the payer. So he will deduct TDS on his account and he will eligible to get credit. And if the payer has deducted TDS on my account, then there is a provision, there is a particulars given in the return of income that I will transfer my TDS credit to my husband by way of saying that the income is clubbed in his hand and he is liable to pay tax on that income. So the TDS credit will also available to him. Okay, so you have learned the provision of clubbing, right? Suppose minor's income is clubbed in the hand of parents. So the parents is eligible to claim the TDS rate. Why? Because the tax is paid by the parents only. Duty of person deducting tax. The person responsible for deducting the tax at source should deposit the sums or deducted to the credit of central government or as the board direct within the prescribed time. Say, for example, as a payer, I have deducted TDS of any party, then I have to deposit the same to the government. Now the due date. Now the due date to deposit. Say, for example, I have deducted TDS in the month of January. In the month of January, TDS is deducted. Then I have to deposit. See, I have deducted the TDS of one person. Say, for example, I have deducted TDS under the head salary on 5th of January. I have deducted TDS under the professional fees on 20th January. So every day I would not be able to deposit the same to the government. So what government will say, whatever amount of TDS under whatever section you have deposited, say for example in the month of January, then the same will be deposited to the account of government on or before 7th of next month. So in this case, if I have deducted TDS in the month of January, then I have to deposit the same to the account of government on or before 7th February. Okay, but for the month of March, whatever amount of TDS deducted in the month of March, the same have to deposit to the account of government on or before 30th April of next year. Why? Because the March is the closing year. Okay, my dear friend. So if you are paying the tax by way of challan, normally in 99% cases, everyone is paying by way of challans. So if you are paying TDS by way of challan, that challan you have to generate from Income Tax Act. You can pay the tax online via net banking, credit card, debit card, or you can take a printout of that challan and issue a check on that challan and deposit the same check along with the challan to the bank. Okay. Sorry. So if the amount, whatever amount of TDS were deducted, you have to deposit to the account of government same day where tax paid without production of an income tax challan. If you are not providing a challan, then you have to deposit the same on the same date on which TDS is deducted, and on or before 7 days from the end of month in which the deduction is made or income tax is due under section 192(1)(a), where tax is paid accompanied by an income tax challan. If the tax is paid by way of challan, then you have to deposit the same on or before 7 days from the end of month. So if the TDS is deducted in the month of December, then you have to deposit the TDS on or before 7th January. But in case of March, you have to deposit the same to the account of government on or before 30th April. Okay, so the TDS deducted in the for in the month of March, you have to deposit the same to the government on or before 30th April of the next year. Clear everyone? Just go through up till now. If you have any doubt, just let me know. Yes, 30th April is only for the TDS deducted in the month of March. For any other month, you have to deposit the TDS on or before 7th of next month. Clear everyone? Yes or no? Give a reply so that I will understand that you will understand. So next is TDS deducted under section 194 IA, IB and M. We have already discussed the same. That in this case, if quarterly return is there, we will discuss the same later. It is covered here only. Say for example, if the TDS is deducted under 194 IA, that is transfer of immovable property for a consideration of more than 50 lakh. IB is rent. The rent amount is 50,000 or more per month, and 194M is for contract professional services. And yes, Anand. M is for contract commission and professional services. The amount threshold is 50 lakh. Okay, so they are not required to obtain a 10. We have already discussed that. They have not required to obtain 10. So what happened? They can file a TDS return by way of PAN. So in that case, they have to file a chalan cum statement, that is along with the payment. They have to file a statement that I have already explained, I guess, in the format of statement. That is, in the statement, you have to report the details of deductor, the date of deduction, the nature of payment, the amount of TDS, the date of deduction of TDS, the date of deposit of TDS, and the section in which TDS is deducted. Okay, so in that case, within 30 days from the end of the month of deduction, say for example, I am deducting TDS under section 194M in the month of December, then within 30 days from the end of month of December, yani ki up to 30th January, I have to file a chalan cum statement in form 26 QB if TDS is deducted under 194 IA, in 26 QC if TDS is deducted under 194 IB, and in 26 QD if TDS is deducted under 194 M. It is IFOS, Jumliwala Mohsin. You have already learned the section 56 today. Okay, now the following person are responsible for preparing such statement for such period as may be prescribed after paying the tax deducted to the credit of central government within the prescribed time. Any person deducting any sum or after 1st April in accordance with the foregoing provision of this chapter, employer referred that is TDS deducted on non-monetary perquisite. Such statement have to be delivered or caused to deliver to prescribed authority to or the person authorized by such authority. Yani you have to file a statement of that the amount of TDS is deducted, the date of deduction, the details of the deductee, and everything. That is the format of statement. The format you have to submit to the CBDT. That is to Income Tax Department. The prescribed form is given. The method of submission is given. The method of sign is given. You can sign by way of OTP or by way of digital signature in anything. If you made a mistake in filing the return of TDS, if you made a mistake in filing return of TDS, say for example, ABC Limited deducted TDS of Mr. A under Mr. J, Mr. X under Section 194J, but while filing the return of income by mistake, inadvertently, they have selected 194A. So the TDS is deducted under 194J, but they have selected inadvertently 194A. So they can rectify the mistake, they can revise the return and provide the correct section. If they forgot to mention something, that is, say for example, during the audit proceeding, it is identified that on a certain amount the TDS is required to be deducted, but actually the TDS is not deducted. So they can revise a TDS return and deduct the TDS and deposit the same to the government. Quarterly statement. You say for you are required to file your income tax return yearly. Same way you are required to file your TDS return quarterly. TDS return quarterly. Here the table is given for due dates. There are 4 quarters in the year. So for first quarter, that is April, May, June, whatever amount of TDS deducted and deposited to the government, you have to file a TDS return in which you will provide the detail of deductee, the section under which TDS is deducted, the rate of TDS if the TDS is deducted at lower rate on the basis of certificate provided by the deductee, then the number of certificate, everything you have to mention in TDS return. So whatever amount of TDS deducted by you during April, May, June, you have to provide all the details to the government in the return of TDS on or before 31st July. Same July, August, September quarter, that is quarter ended on September, you have to file TDS return on or before 31st October. For quarter ended December, you have to file return on or before 31st January. And for quarter ended 31st March, you have to file a return of TDS up to 31st May. Here, why the 31st May? Because the due date of payment is up to 30th April. Okay, so you can deposit the TDS up to 30th April, and after 30th April, you have a 1 month to file a TDS return. So you can file it up to 31st May. Okay. Again, 194 IA, IB, and IM. This of the above table is not applicable. Why? Because they have to file a Chalan cum statement within 30 days from the end of month in which TDS is deducted. Okay. Clear everyone? The table is correct. Clear everyone? Yes or no? Everyone clear? Yes or no? TGIT is an online system by way of you can pay the challan. Chalo. Next is correction of arithmetic mistake and adjustment of incorrect claim during computerized processing of TDS statement. Say for example, I have to deduct TDS under section 194J at the rate of 10%. But while filing the return, I have mentioned the rate of TDS at 8%. So while processing the return by the TDS department, they will provide me a default summary that that kind of mistake is there in your return. Kindly correct the same. Okay, kindly correct the same. And they will provide an intimation to me that that kind of mistake we have identified in your return. Say, for example, if you identified that I have made a mistake, you can revise your return. But even if you forgot to identify, they will intimate you that under 194J, the TDS is required to be deducted at 10%, but you have deducted TDS at 8%. Why? Okay, so you can correct your mistake. If you provide any incorrect claim, that is, if you deposit, if you have to deposit a 5,000 of TDS, but instead of 5,000, you have only deposited 4,000. So in that case, also they will provide you an intimation that there is a shortfall of TDS. So you can correct your mistake at whatever time. Now, what happens if you are not file your TDS return within due dates? If you have not filed your TDS return within due date, say for example, for first quarter, the due date is 31st July. What happens if you have failed to file return before 31st July? I have filed my return of TDS on 15th August instead of 31st July. So I have to pay a late filing fees of rupees 200 every day. Of rupees 200 every day, that is from 1st August to 15th August. And in 15 days, 200 every day. So I have to deposit 3,000 rupees as late filing fees. Okay, but my late filing fees should not be more than my TDS liability. Say for example, for that quarter, my TDS liability is 2,000 only. Then the late filing fees is restricted to 2,000. Say for example, my TDS liability is 4,000. Then my the late filing fees liability is 3,000 rupees. Okay, so actual late filing fees liability, that is 200 every day, or the TDS amount, the liability of TDS, whichever is lower, is your late filing fees. Clear, everyone? See, 26 QB, QZ, everything is a statement that you have to file. Again, for late filing fees, you have to provide a challan. Okay, and if the excess TDS is deposited by you, if the excess TDS is deposited by you, then you have a two option that the excess TDS you can adjust in your subsequent TDS payment, or you can claim a refund of that excess TDS. Due date of return filing. The late filing fees of 200 is not for deposit of TDS. It is for filing of TDS return. If for deposit of TDS, if you late deposit the TDS, then there is an interest. We will discuss the interest in later part. The late filing fees is for default for filing TDS return within due date. We have discussed the due date in this table. So if you file your return of income, return of TDS after this due date, then 200 rupees late filing fees is applicable. Here, chalo. Next is consequences of failure to deduct or pay. What if I am liable to deduct TDS and I have not deducted the same? Or I have deducted the TDS but not deposited to the account of government within due date. To the account of government. So what happened? If I have to deduct TDS and I have not deducted the same, or if I have deducted the TDS but not deposited to the government within due date, then I am the payer. The payer is treated as assessee in default. The payer is treated as assessee in default. Any person, including the principal officer of a company, who is required to deduct any sum in accordance with the provision of Act, or an employer paying tax on non-monetary perquisite under section 192(1)(a) shall be deemed to be an assessee in default if he does not deduct or does not pay, or after deducting fail to pay the whole or any part of tax as required by or under the provision of Income Tax Act. Say, for example, I am liable to deduct TDS of 5,000 and I have deducted only 4,000. I am liable to deposit 5,000 to the account of government. I have deposited only 4,000. Then I am considered as assessee in default. Non-applicability of deeming provision, in which case the payer or the deductor is not treated as assessee in default. So in case of the payee, yes, that is the recipient of money, the deductee has furnished his return of income within due days under section 139. We will discuss due date in next session. Say, for example, ABC Limited is required to deduct TDS but has not deducted the same. Then the ABC Limited is treated as assessee in default. But in which case the ABC Limited is not treated as assessee in default. Say, for example, they have forgot to deduct TDS on account of Mr. X. So Mr. X has filed his return of income under section 139, that is within due date. He has taken into account the amount received from ABC Limited for service provided in the return. So he has already, Mr. X has taken that income in his total income, and Mr. X has paid tax on that income. Say, for example, Mr. X is receiving 5 lakh rupees professional fees from ABC Limited. ABC Limited forgot to deduct TDS on that amount. Now, in this case, if Mr. X filed his return of income within due date, he offered this 5 lakh as his income, and just assume that there is no rebate, and he has deposited the 12,500 tax liability to the government or to the account of government. Then in that case, ABC Limited will not be treated as assessee in default. But in that case, you have to obtain a certificate from chartered accountant and furnish the same certificate to the payer, and payer is responsible to furnish the same certificate to the government. Then in that case, the ABC Limited is not treated as assessee in default. Now, if the default arises, that is the TDS is required to be deducted, but TDS late deducted, or TDS deducted but not deposited within due date, then there is an interest liability. A person deemed to be an assessee in default under section 201 for failure to deduct tax or pay the tax after deduction is liable to pay simple interest at 1% for every month or part of the month on the amount of such tax from the date on which tax was deductible to the date on which tax was actually deducted. So if the TDS is required to be deducted in the month of December, on 31st December, The TDS is required to be deducted on 31st December, but you have deducted TDS on 15th January. Then you are responsible to pay 1% for every month or part of the month. Here, my dear friend, they have deducted TDS late by 15 days. Then also they have to pay interest at the rate of 1% for 1 month, because part of the month is also covered. So TDS amount into 1% into 1 month. Say for example, they have deposited the same, deducted the same on 15th Feb. Then the interest is for 2 months. Now they have deducted TDS on 15th Feb, but now they have to deposit the same to the government on or before 7th March, right? But they fail to deposit the same to the account of government on or before 7th March. So in that case, again they have to pay interest at the rate of 1.5%. Say for example, they have deposited the same on 1st May. Then they have to pay interest at the rate of 1.5% on TDS amount for March and April, 2 months. March and April, 2 months. Okay. So if you fail to deduct TDS and TDS is late deducted, then TDS rate is 1%. If you fail to deposit the TDS to the account of government, then the interest rate is 1.5% per month. Let us discuss illustration number 13 for better understanding. An amount of 40,000 was paid to Mr. X on 1/7/22 towards fees for professional service without deduction of tax at source. Here, my dear friend, the professional service is more than 30,000, so TDS liability is arised, but TDS is not deducted. TDS is required to be deducted on 1st July, but TDS is not deducted. Subsequently, another payment of 50,000 was due to Mr. X on 28th Feb 23. From which tax at 10% amounting to 9,000 on entire amount of 90,000 was deducted. Here what happened, my dear friend, in next payment of 50,000, they have deducted TDS on entire amount. So on 50,000, they have deducted TDS on time. Why? Because on 50,000, 5,000 TDS is deducted, is required to be deducted on 28th Feb, and they have deducted the TDS on 28th Feb. But on 40,000, the TDS is required to be deducted on 1st July 22, but they have actually deducted TDS on 28th Feb 23. So July, the TDS is required to be deducted in the month of July, but deducted in Feb. So how many months are delayed? July, August, September, October, November, December, January, February. 8 months. So 4,000 rupees of TDS, that is on 40,000, is late deducted. So 4,000 is TDS amount, 1% per month into 8 months. So they have to pay interest for 320. Everyone clear with this interest? After that, we will discuss the 1.5% interest for late deposit. Yes or no? Everyone clear with this? Yes or no? Give me a reply, everyone, please. Now the TDS is deducted on 20th Feb. The same is required to be deposited to the account of government on or before 7th March. The same is required to be deducted to the account of government on or before 7th March. But actually they have deposited the same on 22nd June. So they have late deposited, required to be deducted on 7th March, but deposited on 22nd June. So 9,000 into 1.5% for late deposit, the rate of TDS is 1.5%. And the month is March, April, May, and June. Part of month is also considered as full month. Okay, so March, April, May, June. So it comes to 4 months. The interest is 5. So they have to pay 860 total interest. The interest should be deposited to the account of government before filing TDS return. Before filing TDS return. Clear, everyone? Clear, everyone? Yes or no? There is a time limit is given that the assessing officer will issue an order that as a payer you are assessing in default. If you fail to deduct TDS, then they have power to issue an order that you are assessing in default after expiry of 7 years from the financial year in which payment is made or credit is given, or 2 years from the end of financial year in which correct statement is delivered, whichever is later. So they have provided 7 years to you to deposit the TDS, to provide everything. 7th August, there is no 7th August. See, he has not deducted TDS. So there is, if the TDS is deducted, then the deposit is to be done on or before 7th August. But in this case, the TDS is not deducted in July. So for that, we have calculated the interest of 320. And he has deducted TDS in Feb and deposited on 22nd June. So for that, we have calculated interest of 540. Clear, Janish? Non-specification of time limit where tax has been deducted but not paid. If you have deducted TDS but not deposited to the government, then you are also treated as assessee in default. If, see, in 3 cases you are assessee in default. If you are not deducted TDS, if you are not paid TDS, if after deducting you are failed to pay the TDS. Okay. Then also there is a time limit given for passing an order to declare that you are assessee in default. Anand, the 200 penalty is for late filing of TDS return. You are required to file your TDS return for the quarter ended 30th June on or before 31st July. But say, for example, you file your TDS return on 15th August, then you have to pay late filing fees of 200 per day from 1st August to 15th August. Clear? So late filing fees is for late filing of return of TDS, and interest is for non-deduction of TDS and late deposit of TDS. Clear, Anand? So in this 2 case, there is no time limit is given. So at any time, an assessing officer can pass an order that you are assessing in default. Clear, Anand? Yes or no? It is not penalty here. The word used is late filing fees. So on the basis of word, you have to remember that if it is late filing fees, then it is for late filing of TDS return, which is required to be filed every quarter. And the interest is for non-deduction of TDS. Okay, sure. Next is deduction, only one mode of recovery. Recovery through deduction at source is the only one method of recovery. Assessing officer can use any other method of recovery in addition to tax deducted at source. They can issue a penalty notice, prosecution notice, anything. Certificate of for tax deducted. Every person deducting tax at source have to issue certificate to that effect that tax has been deducted and specify the amount so deducted, the rate at which tax has been deducted, and such other particular as may be prescribed. Yani, as a payer, I have to give a certificate to the payee that I have deducted so much amount of TDS on so much amount of service on this date and the deposited to the same to the government. Now here the date of certificate is given. So in case of TDS is deducted under section 192, that is your TDS is deducted under 192 on salary. Then your employer will give form 16 to you. Under form 16, they have mentioned your gross salary, the amount of TDS, the amount of deduction, everything. Your employer shall be issued this form to employee annually by 15th June for financial year. Yani say for example, they have deducted TDS for financial year 21, 22, 23. Then they have to issue form 16 to the employee on or before 15th June 23. And in other case, that is other than 192, the form is given in the section, the form number 16A is provided, and the form 16A shall be required to issue quarterly within 15 days from the due date for furnishing of TDS return. So say for example, if the TDS is deducted under 194A, then bank have to issue form 16A to the deductee within 15 days. So if the TDS is deducted in first quarter, then they have to provide form 16A to the deductee on or before 15th August. That is 15 days from the due date. The due date for filing TDS return is 31st July. Okay, and under section 194 IA, IB, and M, the Chalan cum statement you have to file within 30 days from the end of the month in TDS is deducted. Then you have to issue form 16B, 16C, and 16D respectively. Clear, everyone? Here the note is given. The TDS return filing process is given for your understanding. The rules and forms are only for the information, and you have not memorized those rules and form number. So you are not required to memorize this form number 16C, D, anything. But yeah, you have to remember the due date sections and everything. Summary is given here. Now, person responsible for paying tax deducted at source, the payer, right? So, in case of salary, who will be the deductor? The employer. Okay, and if the employer is company, then the company is required to deduct TDS. In case of interest on securities, then the deductor of interest, that is local authority, corporation, or company, that is the issuer of security, including principal officer thereof, they are required to deduct TDS. Here the nature of income is given, and here the deductor, who will be the deductor, is given. Any sum payable to non-resident Indian representing consideration for transfer by him of any foreign exchange asset which is not short-term capital asset. So the authorized person responsible for remitting such sum to the non-resident. If the non-resident is transferring his any foreign asset, if a non-resident, you have to pay a non-resident any amount, then the authorized person is required to deduct TDS. Yes, Petladwala. Furnishing of information relating to non-resident, non-corporate resident or to foreign company of any sum whether or not chargeable under this provision. Above, point number 3 is for individuals. Point number 4 is for corporates. The payer himself, or if the payer is a company, then including the company, including principal officer. In tax challan, the particular is like this. Your TAN is given, your full name is given, the assessment year is there, the nature of payment is there. So the section you have to select under which section you have deducted TDS, the amount of tax, the BSR code of company bank, the name of bank, challan number. These particulars are given in challan. And the invoice is issued by the payer, by the pay for whatever the services they have provided. And challan is the paid by the payer, not the payee. Clear, Anand? Credit or payment of any other sum chargeable under the provision of, that is the dividend, interest, professional fees. The payer is required to deduct TDS, and if the payer is company, then the company itself is required to deduct TDS, including principal officer. Credit or payment of any sum chargeable under the provision of the Act made by or on behalf of central government or state government. So if the government is providing you the contract, then the government is required to deduct TDS under 194C. Then who will deduct TDS? The drawing or disbursing officer or any other person by whatever name called, responsible for paying or crediting as the case may be. So the authorized person of government. In case of person not resident in India, irrespective of nature of payment, that is non-resident, then the person himself or any person authorized by such person or agent of such person, including person in India, including any person treated as an agent. Bar against direct demand on assessee. See, my TDS is deducted, but the payer has not deposited the same to the account of government. Then the TDS department cannot issue an notice to me that your TDS is not deposited, because it is not my responsibility. It is the responsibility of payer. Okay. Furnishing of statement. Mohammed, you have to revise everything. You have to give a time for that. Furnishing of statement in respect of payment of any income to resident without deduction of tax. In one lecture, someone asked me about Form 15G and 15H, right? So the non-resident, the senior citizen can file a form that is called a statement to the bank that our income is low, so does not deduct TDS. Or say, for example, our interest income is less than 40, does not deduct TDS. This section casts responsibility on every banking company or cooperative society or public company referred to in the proviso to section 194E To prepare such statement for such period as may be prescribed, if they are person responsible for paying to resident, the payment should be of any income not exceeding 40,000. So in this case, the bank, see, if the interest is less than 40,000, then bank is not required TDS to deduct TDS. Okay, so in that case, bank have to prepare a form that, say for example, there are 50% whose interest is less than 40,000, then they have not deducted TDS. So they have to prepare the detail of that 50% and they have to deliver such statement to the income tax authority that the interest is for less than 40. Therefore, we have not deducted the TDS. And if there is any error in case of that statement, they can correct the same. Mandatory requirement of furnishing PAN in all TDS statement, bills, voucher, and correspondence between deductor and deductee. As a deductee, you have to provide your PAN to the deductor. If you are failed to provide your PAN to the deductor, then deductor is responsible to deduct TDS at higher rate. We have discussed one sum that is under section 194 IB. In that case, the 55,000 per month rent is given. And if the owner of premises does not provide the PAN to the tenant, then tenant will deduct TDS at the rate of 20%. In that case, the TDS amount is restricted to the last month of rent. Remember that. So if the deductee is failed to furnish PAN to the deductor, then deductor should deduct TDS at the rate higher of the following. That is the rate prescribed repeated reading Kavita. Prescribed in the Act, rate at the rate in force, finance, the rates given in Finance Act, here the rate given in section, or at the rate of 20%. 5% in case of 194O and 194Q, whichever is higher. So if the deductee is failed to provide you PAN, then the deductor is required to deduct TDS at the rate of 20% if the 20% is higher. But say for example, the TDS is required to be deducted on casual income, then the rate prescribed in this section is higher, that is 30%. So in that case, TDS is required to be deducted at 30%. Here it is given that. However, non-furnishing, here for instance, the rental payment for plant and machinery where payee does not furnish his PAN to payer. Okay. In case of rent of plant and machinery, TDS is required to be deducted at 2%. But if payee is failed to provide the PAN, then payer will deduct TDS at the rate of 20%. However, in case of winning from lottery, card game, etc., the tax would be deducted at existing rate, that is 30% provided under section 194B. Why? Because the 30% is more than 20%. Okay. If you file a declaration in form 15H, 15G that our other income is nil, so kindly does not deduct TDS, then if the payee is paid, then also in that case also you have to provide a PAN. If you are not providing your PAN, they will not give you the benefit of form 15G and 15H and they will deduct TDS. Again, we have discussed that form 16 provided you have to provide as a deductor to deductee form 16A, right? If the deductee failed to furnish the PAN, then no certificate will be provided. And even the lower deduction or nil rated certificate is also not provided by the government if the payee is not furnished his PAN. You have to obtain a PAN. There is a provision, everyone can obtain a PAN. If you are not provided PAN, then the payer will deduct TDS and deposit the same to the government, and the deductee will not be able to claim the credit of the same because he has not provided PAN. As a deductor, you can give information that the PAN is not available, but we have deducted TDS because the liability of deduction of TDS is on payer. As a pay, if you want to claim a credit of that TDS, then you have to provide a PAN. Higher rate of TDS for non-filer of income tax return. Say, for example, in last year, we have discussed the same for 194A, but there is a 3-year provision. But in other cases, if as a deductee, yes, Mohammed, if as a deductee, say for example, ABC Limited is required to deduct TDS of Mr. X for financial year 22-23. But Mr. X has not filed his return of income for FY 21-22 and the due date for filing return of income has expired. The due date for filing return of income has expired and Mr. X has not filed his return of income and his TDS deducted. Here the definition of specified person is given. And his TDS deducted in financial year 21-22 is more than 50,000. Then irrespective of the fact that Mr. X has provided his PAN to ABC Limited, ABC Limited will deduct TDS at higher rate. Higher rate at twice rate prescribed in the relevant provision of the Act, at twice rate or rate in force as mentioned in Finance Act or 5%, whichever is higher. It is for the case, it is not for the case of non-furnishing of PAN. It is the case where the deductee has not filed his return of income for the last year and in last year his TDS is more than 50,000. For that, the government has provided a functionality on basis of if you are on your TRACES portal. There is a income tax portal is there. For TDS, there is a TRACES portal. So on TRACES portal, if you give PAN of any person, then they will provide the details whether they have filed his last year return or not and what will be the TDS liability of that person. What amount of TDS deducted on account of that person in last year. Okay. So if the payee has not filed his return of income for last year and his TDS deducted in last year is more than 50,000, then in current year the payer is required to deduct TDS higher of 20% rate prescribed in section, 20% rate prescribed in Finance Act or 5%. Clear everyone? Up till now, everyone clear? If you have any doubt, just let me know up till now. If you have any doubt up till now, just let me know. Yes, Uday, that is more than enough. Everyone clear up till now? Please reply Dhyanesh, Lakshmi. Every year you have to submit your PAN. But in practical, if the PAN is submitted for once, they have, see, the PAN is not the thing that change every year. Okay. Obviously, he is covered. The payer is required to deduct TDS, na? So if he, as a newly qualified CA, provides the professional service to any person in practice, then the payer will deduct TDS. Okay, chalo. Now the next topic is advance payment of tax. Not verified portal. I didn't get your question, Shankaran. If taxpayer has not verified portal and he deduct normal test, then TDS will be deducted at higher rate. Chalo, advance payment of tax. Generally, if you are paid any tax after previous year, say for example, your previous year is 22, 23. So any amount of tax paid after 31st March 23 is self-assessment tax. And any tax paid other than TDS, okay, because the TDS is deducted by the payer. Other than TDS, TCS, any tax paid by assessee during previous year, that is during 1st April 22 to 31st March 23 is called as advance tax. Because you are paying your tax before finalizing your income, before completion of your previous year. Okay, that's why it is called as advance tax. Advance tax is required to be paid on estimated income. Because at the starting of the year, you have no idea about the exact income. But you can estimate your income. That, say, for example, last year I have received a professional fees of 6 lakh rupees. Then I have an estimated idea that this time I receive maybe 6 to 7 lakh or okay. So the advance tax is required to be paid on estimated income because on the starting of the year you have no idea about your exact income. Now, who is required to pay advance tax? There is compulsory payment of advance tax, but who is required to pay advance tax? So those assessee include two person, include everything. Okay, you have already learned the definition of person. So every person whose tax liability is more than 10,000 after giving credit of TDS, TCS, you have learned AMT and MAT. MAT you will study in final. Say for example, Mr. X tax liability is 50,000. Total tax liability on estimated income is 50,000 and he knows that his payer will deduct TDS of 20,000 from the payment. Then his balance tax liability comes to 30,000. So it is more than 10,000. Yes, then Mr. X is required to pay advance tax. Then on estimated income, Mr. X is required to pay advance tax. Everyone clear with this? Yes or no? Up till now, clear advance tax. कितना clear हो गया? Yes or no? See, institute will ask question from advanced tax. Huh? The interest on failure to pay advanced tax and liability of advanced tax and everything. Up till now, clear? Now, they have provided a concession for advanced tax payment. Alok, I didn't get your question. What is amount? Which amount? Person who is senior citizen. See, senior citizen, that means the person whose age is more than 60 years. So, see, super senior citizen is also covered. If a person is a senior citizen, and that we will discuss, Anand. AMT is alternate minimum tax. It is covered in your PGBP chapter. Anand, we will discuss that the payment of advance tax, it is quarterly. Senior citizen, if senior citizen having a senior citizen is not able to calculate the income and pay the taxes every time. Okay. So in case of senior citizen, if they does not have business income, does not have business income, then irrespective of their tax liability, they are not required to pay advance tax. They have to pay tax on their income, but they can pay such tax at the time of filing return of income. So they can pay self-assessment tax. But in case of senior citizen means whose age is whose age is more than 60 years, is not required to pay advance tax if they does not have business income. But if a senior citizen is having a business income, if a senior citizen is having business income, then they are required to pay advance tax. But those senior citizen who does not have business income, they are not required to pay advance tax. Here, let us discuss. Under section 208, obligation to pay advance tax arise in every case where the advance tax payable is 10,000 or more. Now the advance tax, how we will calculate the 10,000 or more? That the total tax liability minus the credit of TDS, TCS, MAT, AMT, etc. In case of senior citizen who have passive source of income like interest, rent, etc., the requirement of payment of advance tax cause genuine compliance hardship. Okay. Therefore, in order to reduce compliance burden on senior citizen, exemption from payment of advance tax has been provided to a resident individual not having any income chargeable under the head PGBP and of the age of 60 years or more. And those individual whose age is of the 60 year or more and does not have any business income, then you are not required to pay advance tax. If you, as a senior citizen having a business income, then you have to pay advance tax. The limit of 10,000 is obviously available. Advance tax is applicable to every person, Mohammed. Every person. Every case. Computation of advance tax. So first you have to estimate your current income. Estimate, not exit, because at the starting of the year you have no idea about your exit income. So estimate your income and pay the advance tax thereon. You are not required, see, every quarter, the advance tax is required to pay every quarter. Every quarter, you just have to pay your advance tax. You are not need to submit the estimate statement of estimated income, the tax liability, anything to the assessing officer. If assessing officer issue a notice to the assessee that if assessing officer issue a notice to the assessee that how will you calculate your advance tax liability, then only you are required to provide the statement of estimated income to the assessing officer. Advance tax is required to pay during the financial year, during the previous year, if your estimated tax liability after reducing the credit of TDS is more than 10,000, then you are required to pay advance tax. In case of senior citizen who does not have business income, they are not required to pay advance tax. But if a senior citizen is having a business income, then they are required to pay advance tax. Now, if the an obligation of advance tax is arise, then you have to calculate the tax liability as per the rates provided in the Finance Act. Okay, and not the lesser rate. If as a company you are paying regular advance tax, then the assessing officer, if the assessing of see as a company you are not paying advance tax. Okay, but if assessing officer is of the opinion that the tax is required to advance tax is required to be paid by that company, then assessing officer can issue a notice to you that you have to pay an advance tax. They generally issue a notice of advance tax in the last quarter. Now, suppose assessing officer issue a notice and calculate your estimated income based on last previous year. And if you feel that the computation of assessing officer is higher, then you can file your estimated income statement to them to prove that your income for the current year is less. My dear friend, the exemption is given only to senior citizen. As an individual, even if you does not have any business income, if your tax liability is more than 10,000 after TDS, TCS, then you are required to pay your advance tax because you are not a senior citizen. You don't have genuine hardship. You are able to pay your return. You are able to you have idea how to pay online taxes. Generally, the senior citizen does not have an idea. They have to go to the bank and pay the taxes. So if you are not senior citizen, then this is not applicable. Advance tax is paid because government needs regular collection of tax, and at the completion of financial year, you does not have a hard monetary burden that I have to pay 5 lakh rupees. If I have already paid in installments the taxes, then I have not to pay the whole entire amount on a single day. That's why the advance tax is there. No deduction of tax deductible but not deducted. See, if a person is required to deduct your tax, that is the TDS, but has not deducted the same, then you cannot take a credit of that. Okay, because he has not deducted the TDS. So you cannot claim the credit of the same, and you have to calculate your advance tax liability without considering that TDS credit. So whatever amount of TDS is required to be considered, that TDS that have already deducted by the deductor and deposited to the government, whenever you are calculating your advance tax liability, you are eligible to deduct only that portion of TDS which has already been deposited to the government. Yes, Alok, we can say that, but the 10,000 payable is after considering the TDS deducted. Say, for example, my tax liability is 12,000 on estimated income, okay? And my deductor has already deposited 4,000. So my liability comes to 8,000 now. So I have not required to pay the TDS, advance tax, because After credit of advance tax, my liability is less than 10,000. Clear? The advance tax paid by assessee by himself on estimated income, the assessing officer can issue an order that you have not paid the advance tax, kindly pay the same. Okay. Let us have a break of 5 minutes. After that, we will discuss the due date of payment of advance tax. If पेटला द्वारा जो rules applicable है that for residential status, this rule is also applicable here. So if the birthday comes on 1st April, you are considered a senior citizen for the previous financial year. After a break of 5 minutes, we will discuss the payment of advance tax, the due date, installments, everything. Okay, let us have a break of 5 minutes. Is how to pay advance tax. You have to pay advance tax every quarter. Okay. Now, the common advance tax payment schedule for both corporate and non-corporate, other than assessee computed profit on presumptive basis under 44AB and 44ADA. So if you are opted for presumptive taxation, then this table is not applicable to you. Okay, one simple rule is if you are opted for presumptive taxation, then this table is not applicable to you. So if you are not an assessee who opted for presumptive taxation and your liability after deducting TDS and everything is more than 10,000 and you are not a senior citizen, then you have to pay advance tax quarterly on or before 15th June. On or before 15th June. You have to say, for example, my tax liability on estimated income comes to 1 lakh rupees after credit of TDS and everything. Okay. So on or before 15th June, I have to pay not less than 15% of advance tax liability. So I have to pay 15,000. That is 1 lakh advance tax liability into 15%. On or before 15th September. On or before 15th September, I have to pay total not less than 45% of advance tax liability as reduced by the amount, if any, paid in the earlier installment. So what is the 45% of 1 lakh? It comes to 45,000. Now you are not required to pay 45,000. The total amount up to 15 September is 45,000. Okay, but I have already deposited 15,000. See, they have mentioned as reduced by the amount already deposited in earlier installment. So up to 15th April, I have to deposit 45,000 to the government. I have already deposited 15,000 in first installment. So now here I have to deposit 45,000 minus 15,000 already deposited. It comes to 30,000. So in second installment, I have to deposit 30,000. Okay, so that 30 plus 15, 45, done. On or before 15th December, not less than 75% of advance tax liability as reduced by the amount of or amount, if any, paid in earlier installment or installment. So up to 15th December, I have to deposit total 75,000 to government. But from 1 lakh, I have already deposited 45,000 up to second installment. That is 15,000 in first installment, 30,000 in second installment. So now I have to deposit again 30,000. Right? So here I have deposited 15, here 30, here 30. So total comes to, I have already deposited 75,000 to government. On or before 15th March, you have to deposit whole amount of advance tax liability as reduced by the amount or amount, if any, paid in earlier installment. So up to 15th March, I have to deposit total 1 lakh to government. Now from 1 lakh rupees, I have already deposited 75,000 to government in last 3 installments. So now in 4th installment, I will deposit 25,000 to government. So total, I have deposited 1 lakh to the government in entire year. If you guys want to write down this table, just write down for your better understanding. I'll give you 1 minute, and if you have any doubt, just let me know. If you guys have any doubt, just let me know. Everyone clear with this? Yes or no? Yes or no? Please reply. It depends on the it. See, if there is an extra liability other than TDS and TCS, then you have to pay advance tax. Say, for example, you are doing trading business and no one is deducted your TDS, then you have to pay advance tax. Okay, so if Anand, clear, if no one is there to deduct TDS, then you have to pay your own tax. Advance taxes arise when after deduction of TDS, your liability is more than 10,000. So if the on your entire income someone is deducted TDS, then you are not required to pay advance tax. But say for example, I am doing trading business, no one is deducted TDS. Then what happened? Then I have to pay my taxes. Okay, so in that case, advance tax is required to be paid. Yes, advance tax is compulsory if your income tax is more than 10,000. Second and third installment is always not always same because it depends on your tax liability. Chalo. If you are assessee obtained for presumptive taxation, then I have already said the above table is not applicable. Yes, Uday, that's why it is called as advanced tax. Petladwala, you are not understanding the clear point that this 1 lakh is after TDS. If the payer is already deducted TDS from my payment, then whatever the balance I have to pay to the government, this is that amount. The balance I need to pay to the government after TDS. Yeah, I will do the same, Hardeep. Clear, Petladwala? So if you are opted for presumptive taxation, then you are not required to pay advance tax every quarter, but you have to pay your whole amount of advance tax, your whole amount of advance tax in one installment, that is on or before 15th April. You can pay taxes quarterly, obvious, but it is optional, not mandatory. You can pay your tax on or before 15th March. That's it. And any amount you have deposited before 31st March is also treated as advance tax for that year. Clear, everyone? Clear, Uday? Clear, Petladwala? Everyone's doubt is clear, yes or no? If on the date of deposit of advance tax, the bank is closed, then the advance tax is required to be deposited immediately on the next day of the public holiday. Credit for advance tax, again, as you are able to claim the credit of TDS, also you are able to claim the credit of advance tax. Say, for example, my total tax liability comes to 5 lakh rupees. It is my tax liability. And someone deducted 4 lakh my TDS. So someone deducted 4 lakh TDS. Now I have to pay 1 lakh as advance tax during 4 quarters, right? Just that we have calculated in earlier. Now I have paid this 1 lakh by way of this table. Okay, so I can claim the credit of advance tax I have already paid. So whenever I file my return of income, my tax liability is 0 because I have deposited my total tax liability of 5 lakh through TDS and through advance tax. So at the time of filing return of income, I have already paid all my tax liability, all my tax dues. Now no amount is required to be paid. Everyone clear is this credit of for advance tax? Up till now, everyone clear? Please reply yes or no, because if there is any confusion, then you are not able to understand the 234B and C. Everyone, please reply. Chalo, next is interest for non-payment or short payment of advance tax. Now I have to pay 1 lakh as advance tax, but मैंने less pay किया. Okay, so if your tax liability comes to 1 lakh, now if I use the tax liability word, it is after all the credit of TDS. Okay, so if I have to pay 1 lakh as advance tax, and up to 31st March, now I have to pay, if I have to pay, Vedant, I have already explained the same so many times that after, see here only, on my income, my tax liability is 5 lakh, someone has deducted TDS 4 lakh. So I need to pay additional 1 lakh to the government. Now it is more than 10,000. So I have to pay advance tax. Pedladara, that we will discuss later if you have not paid anything. Vedant, clear your doubt? Now my advance tax liability is 1 lakh rupees. I have to pay whole 1 lakh. Don't compare GST here, please. I have to pay advance tax, right? Now up to 31st March, I have to deposit the entire amount of advance tax, but up to 31st March, if I have deposited less than 90% of advance tax liability, that is less than 90,000. If I have deposited less than 90,000 of my assessed tax, say for example, I have deposited only 80,000 up to 31st March. Minimum I have to deposit 90,000 for actually I have to deposit 1 lakh, but for avoiding interest under 234B, I have to deposit at least 90% of my tax liability. But if I have deposited only 80,000, that is 80% of my tax liability, then the shortfall is 20,000. Now you have to calculate your shortfall as your total tax liability minus amount deposited up to 31st March. So there is a shortfall of 20,000 rupees. Now this 20,000 rupees I have deposited to the account of government on 30th June as an self-assessment tax. Because after 31st March, whatever amount you paid is your self-assessment tax. Okay. So after 31st March, I have deposited 20,000 on 30th June. So there is a shortfall of 20,000. Now I have to pay interest under 234B on this shortfall at 1% per month after 31st March. That is from 1st April to the date of deposit of such amount to the account of government. That is April, May, June, 3 months. Okay. So 600 rupees is interest under 234B. But up to 31st March, say for example, I have deposited 95,000 rupees. There is still a shortfall of 5,000. But interest under 234B is not applicable. Okay, why? Because up to 31st March, I have deposited 90% of my tax liability to the government. So 234B interest is attracted when you are failed to deposit 90% of your tax liability to the government up to 31st March. And the rate of interest is 1% from 1st April to the date of deposit of balance tax to the government, and the interest is applicable on balance tax. Okay, the interest is applicable on balance tax, not the shortfall of 90%. Clear everyone? Yes or no? Everyone clear with 234B? 1% for month or part of the month? Everyone clear with 234B? Now let us discuss the interest for deferment of advance tax. See, you are paying your advance tax quarterly, but there is a default on payment of advance tax quarterly. Then interest under 234C is attracted. See, 234B is attracted when you have not paid 90% of your tax liability up to 31st March. 234C is applicable when there is a shortfall in payment of advance tax during installments. See, my advance tax liability is 1 lakh. Here I have to pay 15,000, 45, total 75, and here 1 lakh rupees. Now for calculation of interest under section 234C, they have provided certain relaxation on in first 2 quarters. That here I have to pay 15% of tax due. Right? So 1 lakh is tax due. I have to pay 15,000 up to 15th June. Now I have deposited. It is required to be deposited. And it is actually deposited. Here I have deposited only 11,000. So there is a shortfall, yes or no? There is a shortfall, yes or no? I have to deposit 15,000 to the government, but I have deposited only 11,000 to the government. So here the shortfall is 4,000 rupees. Yes or no, my dear friend? Here the shortfall is 4,000 rupees. So I have to pay interest on this 4,000 rupees at the rate of 1% for 3 months. Here the month is given for first quarter shortfall 3 months, second, third quarter, तीनों quarter shortfall के लिए 3 months, and last quarter shortfall के लिए 1 month interest. Everyone clear with this? Now say for example, instead of 11,000, I have paid 12,500. So they have provided relaxation for first 2 quarters that if you have not deposited 15% of your tax due, but if you have deposited 12% of your tax due, then interest under section 234C for first quarter is not applicable. So instead of 11,000, if I have deposited 12,500 to the government, it is more than 12% of tax due. Tax due is 1 lakh. So it is more than 12,000, yes or no? Yes. Then in that case, in first quarter, the interest is not applicable. Now in second quarter, I have to deposit total of 45,000 to the government. Now I have deposited only 36,000 to the government up to third quarter. Up to second quarter, sorry, I have deposited only total 36,000 to the government. Now here also they have provided the relaxation that if you have deposited 36% of your total tax due, that is 1 lakh into 36%, it comes to 36,000. Then see, you have to deposit 45,000, but if you deposit 36% of your tax due, then In second quarter also, the interest under section 234C is not attracted. So up to second quarter, I have deposited 36,000 in total. Okay, 11,000 in first quarter and balance in second quarter. Then 234C interest is not applicable. So here it comes to nil. Even if there is a shortfall of 9,000, I have to deposit 45 total, but I have deposited only 36,000. Because up to 6 months, you have no idea about your exit income. Now, for third and fourth quarter, the relaxation is not provided. So up to third quarter, you have to deposit 75,000. That is 75% of your tax due. In my case, it is 1 lakh. So I have to deposit 75,000 up to 15th December. Now, say for example, total 70,000 I have deposited, 36,000 in second and 70,000 total I have deposited in third quarter. There is a shortfall of 5,000, yes or no? Yes. So on 5,000, I have to pay 1% interest for 3 months. Now, in last quarter, I have to pay 100% of my tax due, that is 1 lakh, but I have deposited only 85,000. So that is total 85,000. So there is a shortfall of 15,000. Yes or no? Yes. So on 15,000, 1%, 1 month interest I have to pay. Is that clear, everyone? Yes or no? So the relaxation of 12% and 36% is provided in first and second quarter. So if you have paid 12% of your tax due in first quarter, then 234C interest is not applicable. If you have paid 36% of your tax due up to second quarter, then 234C interest is not applicable. Otherwise, if there is a shortfall, then the interest under section 234C is applicable. Clear, everyone? So this is the 234C. In case of presumptive taxation, only the last quarter is applicable. There is, if you have not deposited entire amount up to 15th March, then on the shortfall, you have to pay simple interest at 1% for 1 month only, because other 3 quarter is not applicable if you are opting for presumptive taxation. Non-applicability of interest under 234C. So 234C is not applicable if the shortfall is due to capital gain. Because see, for example, I have earned capital gain in third quarter. So in first and second quarter, I have no idea that I will earn the capital gain in third quarter. So in that case, you can pay entire amount of capital gain tax in third quarter. Now, say for example, I win the lottery in the fourth quarter, then in first 3 quarter, my total estimated income will change, because in fourth quarter, I earn a lottery, right? So in that case, my entire income tax calculation is changed. So in that case also, the shortfall is because of winning from lottery. The 234C is not applicable if the shortfall is due to winning from lottery income. Okay, if it is other income, due to other income, then 234C is applicable. I am again. 234B is applicable to everyone, even if you are opting for presumptive, because 234B is applicable after 31st March. So if you are opting for presumptive taxation, you have to pay your entire tax up to 31st March. If this is the first year of business and due to the estimated income, if you fail to provide the exact computation, then also 234C interest is not applicable. Clear, Petladwala? Both sections are different. 234B is applicable after 31st March. Even you are opted for presumptive taxation, you have to pay your entire tax up to 31st March. If you have not paid your entire tax up to 31st March, then on shortfall from 1st April, you have to pay TDS, interest under 234B. 234C is for interest on the advance tax paid during the year. Yes, Vedant. See, Danish, in first quarter, if you fail to pay 12%, that is, say, for example, I have to pay 15,000, zero amount I paid. So there is a 15,000 shortfall. So I have to pay interest at the rate of 1% on 15,000 for 3 months. Even if after the year, at the time of filing return, I had paid the tax. See, at the time of filing return, you have to pay tax. Okay, this is the interest if you fail to pay regular tax without paying your tax liability. You if you pay the payable return, then the notice will be issued by the income tax department. So everyone clear with advanced tax 234B and C interest? Yes or no? Everyone, yes or no? Please reply. If you have any query, just let me know, because after this I will start with the TCS concept. So if in between you ask the question, then it will create a confusion to other students. Anand, okay, clear. Then Dhyanish, clear. Okay, chalo, let us start with the new topic, that is tax collection at source. Basic concept. Tax collection means you have to collect the tax. Okay. So in this case, the buyer of product will pay you the tax, and as a seller, you have to collect tax on the invoice amount. As a seller, you have to collect tax. See, earlier is a deduction. So payer is required to be deducted the tax from the payment. Here, as a recipient, the seller is a recipient of amount. The seller of product is recipient of amount. So the seller is required to collect TCS from buyer. Okay. So for different product, the rate of TCS is given here. You have to memorize such rate. The TCS is very small topic. So if you purchase alcoholic liquor for human consumption, then as a buyer on the sale price, you have to pay TCS to the seller. If you sell 10 tulips, then from buyer you have to collect TCS at the rate of 5%. So for different products, the rate of TCS is given here. This rate is given for specific products, scrap. So if you are selling any scrap to anyone, then you have to collect 1% TCS on scrap amount. There is no threshold limit is given for this product. So any amount of scrap you sell, you have to collect TCS, but it is not personal scrap. Okay, it is for business scrap. If you sold your house scrap, then scrap of your house, then the TCS is not applicable, obviously. Next is lease or a license of parking lot, toll plaza, mine, or quell. Say, for example, if you are traveling by highway, then you saw somewhere. Yes, seller is required to collect TCS from buyer. The credit of TCS is available to the buyer because buyer is paying TCS to the seller, and seller will deposit the same on the behalf of buyer to the government. So if you saw some toll plaza was there and they are collecting the toll, okay. So for the toll plazas are constructed and it is given on lease to the highway developer agencies to collect the toll. So toll plaza will have to pay rent to the owner. Okay. So on that, the TCS is required to be collected by the person who grant the lease of that toll plaza. So the owner of toll plaza will have to collect TCS from the rent of toll plaza. Section 206(1)(c) provides for collection of tax by every person who grant a lease or license or enter into contract or otherwise transfer any right or interest in any parking lot or toll plaza or mine or quarry. खान जिसे बोलते हैं ना वो, to another person other than public sector company for use of such parking lot or toll plaza or mine or quarry for the purpose of business. The rate of TCS is 2%. The rate of TCS is 2%. So say for example, ABC partnership firm will provide the parking lot on lease to XYZ mall. Now XYZ mall will pay the lease rent to ABC firm, say for example 10,000 per month. Now ABC firm is required to collect, the ABC firm is required to collect TCS at the rate of 2%. That is 200 rupees from XYZ. Now the ABC firm's income is 10,000 only. This 200 is deposited by ABC firm to the government on account of XYZ mall, and XYZ mall will take a credit of this 2 lakh from their income tax liability. Clear everyone? Yes or no? First point is clear. Second is sale of motor vehicle value exceeding 10 lakh rupees. So if you are purchasing a motor vehicle, that is car, if anyone is having car worth rupees more than 10 lakh, just check the invoices. Okay. So if you are purchasing a car of value exceeding 10 lakh, say for example, I am purchasing a car and the value of car is 12 lakh. Okay. I will purchase the car from XYZ showroom. So the showroom of car is the seller and I am the buyer of car. The consideration for car is more than 10 lakh because the consideration price is 12 lakh rupees. Okay. Now, if the consideration is more than 10 lakh, then the seller, that is the XYZ showroom, is liable to collect TCS of 1% of the sale consideration. In my case, the rate of TCS is 2%, that is the 200, 2% of 10,000. So if the consideration is 12 lakh, the car selling price is 12 lakh rupees, it is more than 10 lakh, yes, the showroom of the car who sell the car is required to collect 1% TCS. 1% TCS from me, that is from buyer. Now here, what is the amount of TCS? Everyone? It is 12,000. So seller will raise an invoice in which the basic value is 12 lakh and the TCS is 12,000. So I have to pay 12,000 TCS to the showroom owner, and showroom owner will deposit this 12,000 on my account to the government, and I will claim the credit of 12,000 from the government, from my tax liability. Okay, so if you are purchasing a car and the value of car is more than 10 lakh, then on entire sell consideration, the showroom owner will collect on road, off road, it is the invoice amount. That's it. Whatever amount you have to pay for your car to the showroom owner. Whatever amount of invoice they are raised. Clear, everyone? Every car, they have used the motor vehicle. No, TCS, GST is not included in the calculation of TCS. Every time you have to check just basic amount only without GST. Clear? Chalo, next is overseas remittance or an overseas tour package. So if you are transferring any amount out of India or if you are purchasing a tour package for foreign tour, Vedant, please don't ask the question of GST here. GST is a separate thing. So if you are purchasing a tour package for foreign trip, then the seller of tour package, the travel agent, the seller of tour package, the travel agent is required to collect TCS at the rate of 5% on the tour package amount. Say for example, I want to go to Paris and my tour package is worth rupees 5 lakh rupees. Then on 5 lakh, my tour operator will collect TCS at the rate of 5%. So that is 5,000 rupees. He will collect as TCS and deposit the same to my account. And I will claim the credit of that. Now, say for example, other than that, overseas remittance means I have to remit, say for example, certain amount to out of India. So first what I have to do, I have to convert the rupee into dollars. Say for example, I have to remit 10 lakh rupees, 10 lakh to US. So I cannot remit the 10 lakh rupees. I have to collect that 10 lakh rupee into dollar. So for that, who will convert this 10 lakh into dollar? So authorized dealer of Reserve Bank of India. Okay, then the authorized dealer will collect TCS from me at the rate of 5% on 10 lakh rupees. Piyush, your TCS is 15,000 and your income tax taxable. Yeah, definitely. If there is no income, then you can claim a refund of TCS at the time of filing return of income. It is exactly the TDS. See, there is excess TDS is deducted, then you can claim the refund of TDS as well TDS. So here the authorized dealer will collect 5% of 10 lakh as TCS. The time of collection of TDS is debit in the books of account because here the seller will pass an entry. So the buyer is the debtor for the seller. So the debtor account is debited in the books of account. Okay. So here the time of collection is debit in the books of account or receipt, whichever is earlier. Here the seller is received amount. That's why the debit or receipt, whichever is earlier. Sorry, or payment or receipt, whichever is earlier. Everyone clear? So for foreign tour package, whatever is the amount, the tour operator will collect TCS at the rate of 5%. For foreign remittance, there is a limit is given, threshold limit is given. The authorized dealer will collect TCS if where the amount is remitted for the purpose other than purchase of overseas tour program, because on overseas tour program TCS is applicable, there is no threshold limit. And the amount or aggregate of amount being remitted by buyer is less than 7 lakh. Say for example, I want to remit 5 lakh to USA. So I have to purchase dollar, right? 5 lakh rupees I will give to the authorized dealer, and against that I will receive the dollar. Okay, so the amount is less than 5 lakh, less than 7 lakh, yes or no? Yes. So in that case, if the amount is less than 5 lakh, then the authorized dealer is not required to collect TCS. Say for example, I want to remit 5 lakh to USA. So I have to purchase a dollar for 5 lakh rupees. Okay, so in that case, authorized dealer will not collect TCS because the amount of remittance is less than 7 lakh. If the amount of remittance is more than 7 lakh, say for example, I want to transfer 10 lakh rupees to USA. So I have to purchase the dollar for 10 lakh rupees. Okay, so in that case, the authorized dealer will collect TCS on amount in excess of 7 lakh. So here he will not collect the TCS on entire amount, but he will collect TCS only on amount exceeding 7 lakh. That is, I have to remit 10 lakh minus threshold 7. So he will collect TCS on 3 lakh rupees. That is balance amount. Okay. Now, where the amount is remitted out is loan obtained from any financial institution for the purpose of pursuing any education. Now, I am remitting the amount out of India to repay the loan taken for education purpose. And the amount remitted is more than 7 lakh. Now, I am remitting 10 lakh rupees to USA for repayment of educational loan taken. Now, in that case, on 3 lakh rupees, that is the amount exceeding 10 lakh, the authorized dealer will collect TCS at the rate of 0.5% and not 5%. Okay, here the rate of TCS will 0.5%. Clear everyone? Next section is sale of goods value exceeding 50 lakh 2061H. In last session, we have already discussed this section that if as a seller you are selling goods worth more than 50 lakh and you are receiving more than 50 lakh in current year and last year your turnover is more than 10 crore, then on an amount exceeding 50 lakh rupees, you have to collect TCS at the rate of 0.1%. If TDS is applicable, then this section TCS is not applicable. If TDS under 194Q is applicable, then this section is not applicable. We have already covered this section. Do the TCS? Yes, TCS collector also issue the certificate. Vedant, I didn't get your question, that is part-time TCS. Where is it is given part-time? Vedant, please clear your question. Here the meaning of certain term is given, that is overseas tour program package means TCS is to track all kind of these transactions. So if someone has deducted your TCS and you do not have any other tax liability, then don't pay advance tax or self-assessment tax. That's it. So tour package means the any tour that offer to visit a country outside India. Okay, it includes everything. Wait, Petladwala, wait, it is pending. We will cover everything. So it is hotel, travel, boarding, etc. expense. Buyer includes everyone but does not include the government authorities. Seller means the seller include everyone whose turnover in the last year is more than 10 crore. Tax is required to be collected as a seller. Whenever you sell the goods, you will pass an entry like Mr. X is a seller. Mr. X account is debit to sale. Whenever Mr. X will make the payment, you will pass an entry bank account debit to Mr. X. So the date when you debit the account of Mr. X or the date on which the payment is received, whichever is earlier, at that time you have to collect the TCS. Clear, Vedant? Higher rate of TCS for non-furnisher of pen. Again here, if the buyer has not furnished the pen to the seller, then seller will collect the TCS at higher of a twice rate prescribed in the relevant provision and 5%, whichever is higher, and 1% in case of sale of goods. So for other section, the twice rate, that is, say for example, tour operator, the rate given is 5%. Okay. So the twice rate is if the buyer of tour package has not provided PAN, then the tour package operator will collect TCS at the rate of 10%. Why? Because the twice rate, the rate provided in the act is 5%. So double of 5% is 10%, or 5,000, whichever is higher. So higher is 10%. So you have to provide your PAN. Again, the same provision is applicable if the specified person, that is the person, I have already discussed the meaning of specified person. If the buyer has not filed his return of income for last year and his liability, his TCS is more than, instead of earlier we have discussed the TDS, here it is TCS. If the TCS in last year for which he has not furnished return of income is more than 50,000, then also the seller will collect TCS is higher of double the rate provided in the act or 5%. Due date for furnishing TCS return. Now the CBDT has provided certain clarification that in case of motor vehicle, there may be a double taxation, that if Pitladwala, I have explained this in last session that if both TDS and TCS is applicable, then TDS is override the TCS. Then in that case, only TDS is required to be deducted and TCS is not required to be collected. I have explained the entire thing by way of table and by way of some examples. Now, say for example, in case of, जैसे we have learned in case of payment gateway, in case of e-commerce operator, there is double taxation, that one payment gateway and the e-commerce operator. So both are e-commerce operator, so payment gateway and Flipkart. So we have deducted TDS at only from the Flipkart and not the payment gateway. Same here. Here also, there is manufacturer of car, dealer of car, and buyer of car. So TCS of that we have learned the 10 lakh wala provision, that The seller of car has to collect TCS at the rate of 1% if the sell price is more than 10 lakh. Then in that case, here the dealer is required to collect TCS. If manufacturer is paying, manufacturer is providing car to dealer, then the manufacturer is not required to collect TCS. The entire questionnaire is given here. Here with the example, they have provided the same. Yes, yes, Vedant. Time of collection is debit in the books of account or receipt, whichever is earlier. TCS is not required to be deducted if the buyer has provided declaration that I will deduct TDS, right? Then again the TCS is not required to be collected. Now the payment of due date for payment of TCS. See, my dear friend, in interlevel, the TCS provisions is only for at a glance. It is summarized provision. Okay. At final level, you will discuss the TCS in very much detail. So in this case, the TDS is required to be deposited to the government on or before 7th of the next month. Okay, if the payment is done by income tax challan, and if the payment is not done by income tax challan, then on the same date on which the TDS is deducted. Same provision is applicable in case of TCS. If the TCS payment is done without production of income tax challan, then on the same day you have to deposit on the day on which TCS is collected. If you are deposited the TCS by using income tax challan, then you have to deposit the same on or before 7 days from the end of month in which TCS is collected. Here for the month of March also you have to deposit TCS on or before 7th April. Here they have not provided the exemption that you have to deposit, you can deposit the TCS up to 30th April. No. The difference of TDS TCS given is you have to just read that. Here the common sections of TDS and TCS is given. Now the due date for filing, the last one is here, it is not given, but for your knowledge, I will explain you the same. We have discussed the due date for filing TDS return. Same way we have to file a TCS return. And the due date for filing TCS return is for 30th June ended quarter. Yes. So in case of you have to file like TDS, you have to file the TCS return also. So the TCS return is also filed by the seller quarterly. So for first quarter, the due date is on or before 15th July. For second quarter, the due date is on or before 15th October. For third quarter, the due date for filing return TCS return is on or before 15th Jan. And for 31st March ended quarter, the TDS is 15th May. TCS is collected by the seller. Advance tax is paid by yourself. The assessee will pay advance tax. TCS is not applicable on everything. TCS is applicable only on the things which is provided in the act. जबकि advance tax आपको आपकी पूरी income पे pay करना है, whatever is the nature of income. Now everyone clear with the here our TDS TCS provision is ended. If I will give you 2 minutes, if anyone having any doubt, just let me know. If everyone is clear with the provision, just let me know so that I'll end the session. Everyone clear? Okay, so I will end the session. Have a good day. Mr. Ashok, our session is ended. Kindly end the session.